our Bitcoin IBIT is now over $100 billion.
$100 billion, I know,
so
from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know.
Yeah, but
love it now.
But I grow and learn.
I heard you say that on 60 Minutes.
I did say that.
They want retail buying at the top, and congrats to those of you who set your stop losses appropriately. For the rest of you who haven't figured that out yet, stick around. Let's see where the crypto markets are headed. Are we entering a bear market like the charts and analysts project, as Bitcoin's hitting 111,000 at the time of this recording? Massive liquidations, almost to the same tune that we saw on Friday. Fed Chair Jerome Powell speaking today, and that will have an effect on the crypto and stock markets, just like Trump's tweets do. Even some scary technicals suggesting that we have entered a bull trap on XRP. We're going to jump into the charts. We're going to jump into the rest of the epic breaking crypto news in this video so that you can be as informed as possible, because nobody's got time to sit around and research this stuff all day in and day out. And as we saw on Friday, all it took was one tweet to completely decimate the markets. But we have seen these patterns before, big drops as well as big pumps, and there is a lot to cover in the charts and in the data that we're going to look at today. As always, welcome back to the channel. I'm JR, your favorite crypto dad, and you know what to do. Give me a comment, 777 down below if you're feeling bullish. If you're feeling blessed and you are living your best life, smash that like button, hit subscribe to affirm it, and let's run into the video. Ending your workday on a Friday to a massive liquidation in the crypto markets following a Trump tweet, wondering how the 3-day weekend is going to affect the opening markets for the stock markets and crypto on Tuesday, and then waking up to see XRP bull trap news posted all over the place, Bitcoin's dropping again to 111,000, wondering, are we repeating ourselves? Gosh, I'm really glad I set that stop loss over the weekend when I bought the dip. And if you did, you probably set Ethereum stop loss around 4,000, which is a really good place to be, and you didn't lose out anymore, right? You scooped up a bunch on the dip, and now you're sitting cash heavy, ready to buy the next dip after this. Again, not financial advice. This is informational, educational, and some entertainment purposes only, because at the end of the day, this is news and this is rumors, and they affect the markets because people are emotional beings. But we know that there are technicals and there are charts out there that show if you follow those, you tend to always win, just like this whale. This is the whale wallet that just minutes before Trump's tweet on Friday posted a giant short on crypto. I think they made out at the end of it like $195 million in profit. And then they doubled down on it, increasing their short position. I believe it was Sunday. At the time of this video, they have increased it yet again. They are currently sitting on a non-closed position, by the way, to the tune of a $500 million Bitcoin short. Does this whale know something? Is this inside information that they're gambling on, or do they just know the charts? And I think when it comes down to it, we've seen this chart that I shared before for you guys in previous videos. We've talked about the cycle, the cycle marching of Bitcoin from cycle high to cycle low, low to high, etc. Going back 2015, we've seen it's 1,064 days every single time from a market cycle low to a new high. And it's 364 days every single time from a high to the new bear market low. And this pattern has repeated itself, and October 6th showed that exact scenario played out. We saw the high on Bitcoin on October 6th, 1,064 days from the market low previous to that. And we wondered, is that it? Is this the end of the bull market? Are we going to start to see the rest of altcoin season and capitulation down into the meme coins and stuff like that, as you do see those waves of liquidity move? That is the question at hand, and I think that a lot of really smart people out there see that those moves are ready to take place and they capitalize on that. And there is no doubt about it that institutions have been capitalizing on these opportunities, just like the whale, right? Again, insider or not, this person controls over $10 billion in assets, about $5 billion in staked Ethereum. People saying on-chain data, linking the wallet to Garrett Jin, the former Bitforex CEO, and there's been denial of that. But the fact is that the pattern always remains the same. Massive USDC deposits, shorts open right before big macro crypto events take place, positions scaled during the fall, profits withdrawn to a layer 1. Wash, rinse, repeat. You don't get to be a $10 billion holding by simply gambling on the markets. It is through educated moves. But that is a fact. The government, U.S. government, as well as institutions are capitalizing on these moves. And the U.S. government's moved. I will dispel those rumors that the U.S. government is selling Bitcoin. They have moved 667 Bitcoin from one wallet to a new wallet today. We do, however, see that BlackRock has sold Bitcoin in the last 12 hours. They've been selling quite a bit of Bitcoin. That's simply, taking some profits and getting ready to buy the dip. And in other breaking news coming out of Altcoin Pro University, where I'm just going to say on a side note, we had a lot of members of the community over the weekend coming out and talking about how happy that they were that they had stop losses set, and also for entry point targets and stuff like that. So they've been following their educational platform. They've been learning how to read charts and do technical analysis and make good decisions that way. And it's all because of the education they got at Altcoin Pro University. The link is down below. We'll talk about more of that in a minute. But breaking news we're talking about coming out of there is the $2.5 trillion market crash that we saw on Friday. It could have simply been a misunderstanding between Trump and Xi, right? We talked about the whale and coincidental making a short play right before Trump's tweets. At the end of the day, Trump came out before the end of the weekend was even over and said, Xi just had a moment of bad judgment or something like that, like it was a big mistake. Womp, womp, womp. I mean, guys, the markets don't move like that. What was more crazy than all the tweet news back and forth was looking at the on-chain data and realizing how thin the liquidity actually is in some crypto projects. To see things like Atom drop basically 100%, all the way down to 0.001. See SWE drop down to like 8 cents or something crazy like that. It just means that there's just no liquidity and there's just so much leverage. It's like the 2008 derivative market implosion that we saw in the stock markets taking place right before our eyes in crypto. And the one thing that I will say I'm really excited about more than anything was the resilience of the market. There were projects like Shiba Inu, and I know I hate to bring up the old OG meme coins and stuff like that. There are projects like Shiba Inu that just held so strong, and people say there was no sellers. They just weren't selling. You know why? Because they haven't even remembered that they hold Shiba Inu. Retail is virtually non-existent at this point. So when we talk about XRP, that's where I've also got a lot of excitement, because at the end of the day, we're just in an echo chamber. Let's just be really, really honest with ourselves about this. A lot of our XRP, community XRP army, people that are watching these videos are big XRP holders like myself. Again, it's not financial advice, so don't run out and buy it. Definitely not yet. And so the thing is, we are in an echo chamber. When retail hasn't entered, we're all just sitting here, buying and selling against each other and getting wrecked by institutions who are trying to scoop it up and accumulate before these ETFs go live. And so that's where we look at this big, giant, symmetrical triangle that we talked about, as this guy on the earth says on X. Watch this triangle emerge over 7 years in anticipation of the breakout. And we got that breakout. We ran all the way back up to $3.60 something cents, whatever, right? And all for what? We see a flash crash on Friday bring the whole thing right back down, and people are thinking it's over, the bull run is in. Guys, look at where it bounced, and we'll show you in the charts and the technicals in just a moment here. I'll jump over to XRP, but look at where it bounced. It bounces right off of the downward trending, what used to be resistance, and is now flipped to support. I'm more bullish than ever. I really am more bullish than ever. And there's many people pointing out that this looks like a bull trap, that there's this ascending narrowing wedge on XRP. And some might not necessarily be wrong in saying that. It looks like an ascending narrowing wedge, but we have a massive level of support. As Block Bull points out on X, we have about 80% chance that $1.56 is the new low on XRP, and about a 20% chance that we fill it at 70. So are we going to drop down below this $1.56 support? I'm going to show you guys in the charts in a moment here where there's a lot more support above that too. But even more supportive than that is the fact that the CME group has just launched options trading on Solana and XRP. We have a plethora of ETFs that are ready to be approved. Obviously, the government is still shut down, so that's going to be a little bit before that happens. And then we just have the charts. We trust the charts. Don't buy the news and sell the rumors, right? If there's any financial advice that I will give, it's always just that. Don't invest with emotion. Always trust the data. And so let's jump into XRP's chart in a moment here. First, we're going to take a look at the daily candles on Bitcoin. A lot of people freaking out about the markets right now, seeing liquidations. Just get off of Twitter if you need to. Just stay off of X. Just take a break, or find something else. Go look up some celebrities that you want to figure out what kind of shenanigans they're getting themselves into, or something like that. But just take a break, or better yet, if you're a crypto dad, get outside, go hang out with the kids. It's a beautiful day, I'm sure, in most areas of the country right now. But Bitcoin is sitting at the time of this recording at $111,600. And what I'm going to point out is that I've been talking for some weeks. I would say, you know, we've had this bounce probably back here at the end of September, and since then we started our run up for October. And for that the majority of October, I've been saying, you know, there's bearish divergence on Bitcoin, and if we break to the downside, where do we go? And again, we talked about a lot of different support levels, 116, 118, things like that. But it's always been pointed out in every one of my videos. It's been pointed out that we could go lower. We could reach that 109 to 112 level. And if we lose support there, where do we go? And then we do have to be realistic and talk about 108. That's the 1100 daily candle indicator on the EMA ribbon. That is a big institutional measuring tape for them. And we could go down that low. But just below 108, you've got pretty solid support between 104 and 106, somewhere in that range. But here's the cool part, right? The big fat candle, and I'll just look at the daily candles here, guys. I'm not going to go into the hourlies and relive Friday all over again. But for those of you who caught it live while it was happening, I know it was a little bit scary. Drop your comments down below. I was actually on the phone with Ryan Huggins when the flash crash happened on Friday. We were talking about something completely irrelevant, and all of a sudden we're just like, holy crap, what's happening here? And so that's what we're talking about, these EMA ribbons and institutional markers. But watching the daily candle here, it touched right off of the bottom of my level of support. Again, my technicals, not your technicals, not financial advice. This is just simply informational, educational, and hopefully giving you a little bit more of a rounder perspective when you're doing your research. And so, but looking at that right at the very bottom, I got my level of support ending up 109,700, and on the Bitstamp chart, that is what we were able to see on that. I know that there were other exchanges that saw lower numbers than that, and that's something that with crypto you're going to see. You're going to see that's where arbitrage opportunities come from, right? You're going to see opportunities for different prices at different exchanges, and so looking at the Bitstamp one. The reason I bring that up is because we ran back up, and just over the weekend we had a little bit of a retrace, a little bit of a buy the dip. Again, set your stop losses appropriately, because we are currently, chopping at this moment on this daily candle. And I will, for this case, jump into the 1 hour just for show you guys kind of what's going on today. And this is why I'm bullish on crypto in general. This is a big fat M pattern right here, and those are typically a bullish pattern, and it's rounded out the very bottom, bouncing off of the previous area of support where it bounced on Friday. It's bouncing, it's rounded out right there, and it's starting to move back to the upside. And so that's why you see on the daily candle, you see this big candle wick forming as we start to move and make our way back up to it. So the question is, are we done? Do we have further downside to go? And with that, I'm going to say, I think we're going to chop. I think we're going to chop for a little bit sideways before we move to the upside. And my evidence for that is simply suggested by the RSI. I'm looking at the RSI right now, currently chopping lower in the lower range, 35 to 45 range, which is near the oversold territory, which would be bullish, right? And it's also moving below. It's moving below the RSI moving average. And so anytime we see a cross, well, the RSI moving above the RSI moving average, that's considered a bullish divergence. And right now, we've crossed back below our bearish divergence there just a few days ago, and now we're moving sideways. So For me, I'm bullish on it. I know that most of you all are more concerned about XRP and are we really in an ascending narrowing wedge? And if so, is that the case? And the reality is that we broke out to the downside with that big fat drop on Friday of a descending narrowing wedge, which was a bullish pattern, right? Bullish as it may be. When you break out of a descending narrowing wedge, you have the possibility of breaking to the upside or to the downside, right? And if you broke to the upside, we were talking about targets of all the way up to $2, $4.20, something like that. You break to the downside, you're looking at a full retrace, could be as low as the $1.98 to $2.08 level. That's this red bar of support that I've got right here. Well, we went lower than that. We dropped all the way down to $1.53, $1.58, I want to say, on many of the exchanges that were out there. And that's that long wick you can see on that daily candle from Friday. So we've retraced back above it. And you're currently at the time of this recording, we're chopping rounded back out. Same thing like you saw on Bitcoin. Let's jump over to the hourly for this. Same thing that we saw, this M pattern forming here. This is all institutional play. This is why I'm not freaking out in the slightest bit. Retail is non-existent. Go to Google Trends and just start looking up crypto words. Look up exchanges like Coinbase and Crypto.com and Binance and look at the search volume. What you'll see on Google Trends is that we are not even close to the breakout search volume that takes place before every market cycle high for these keywords, these big crypto-related keywords. Most of them are exchanges, right? And you're going to find individual cryptos in that, with XRP itself, with Bitcoin, and Ethereum, and Shiba Inu, and Cardano, and all that stuff. And you can see the 4-year cycles if a token or a coin has been around long enough. You can see these patterns repeat themselves. It is just following the charts, following the data, and following the evidence. And so looking at this M pattern here, I see the same pattern on XRP that we saw on Bitcoin, same thing on Ethereum. $4,000 was that stop loss. So many people getting in on that one there and licking the frosting off their cupcakes, that's for sure. So the point is that this institutional involvement is encouraging to me. Retail is non-existent. Don't get wrecked, right? Don't stand by and just be manipulated and fooled emotionally over and over and over again by these institutions. And at the end of the day, too, it also comes down to your support network, your support community, and your educational community. If you have an educational platform you're working with, great. I hope it's working for you. If you made money over the weekend, I'm encouraged by that. If you didn't, you need to ask yourself why. If you're leverage trading and you're getting wrecked and you can't even make money in the spot market, it's probably time to reevaluate your strategies a little bit. So when it comes to that, I want to encourage you guys to check out the link, the Altcoin Pro University, down below, and I want you to listen to this.
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt. So this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today, and it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.